Going to do a video today about the pros of ETFs, why I love ETFs, why I prefer them specifically versus individual stocks, and some of the reasons why I like, these broad investments as opposed to a single stock. So, of course, we're going to ask ChatGPT, go through a few of these, and then I'm going to give you, from the human side of things, my own thoughts. And I have 3 points here that don't show up here on ChatGPT. So very quickly, let's dive right in. Number one, diversification. A single ETF can hold dozens or even thousands of stocks or bonds, helping spread risk across many companies, sectors, or asset classes. So obviously, if you buy a stock, you're only getting that one company. If something happens with a lawsuit with them, if something happens where they get sued, they have a bad product, they do a bad acquisition, you're very much insulated and protected from that if that investment or that company is only a small sliver of the overall pie that is the ETF. Number two, low costs. ETFs often have lower expense ratios than mutual funds because they are usually passively managed, tracking an index, no sales, loads, or high management fees. All right, so a mutual fund is when other people are managing that money. Let's say you give them $100, they're trying to invest in different sectors and creating their own ETF basically on the fly to try to beat the market. These are just tracking the market, so it's a lot more locked in. You don't have to trust anyone. It's on the computer. It's tracking the index as opposed to some hot shot who thinks they can beat the market. Number three, liquidity and flexibility. Traded like stocks, ETFs can be bought and sold throughout the trading day at market prices. Investors can use limit orders, stop losses, and even margin trading with ETFs. So that's a little more advanced. But to the first point there, you can trade these throughout the day as opposed to index funds, which they just have their price on close. So ETFs jump around, move around. And guys, look at this stuff. Go on the stock app throughout the day and look up some exchange traded funds, look up some index funds, look up some mutual funds, and see the difference. See how they perform throughout the day, interact, see which ones move, which ones don't. That's kind of something you can look at. On the bottom, the second point here, investors can use limit orders, stop losses, or even margin trading with ETFs. That's a little more advanced than I want to get at this point, but those are things that you should understand, and just Google them or go on Investopedia and look those up if you want to get a little more in depth about the stock market and investing. Number four, transparency. Most ETFs disclose their holdings daily, so you know exactly what you're investing in. This differs from many mutual funds, which may only disclose quarterly. So that's a really nice point. All right, so that's all I want to go into from ChatGPT. Now, my own thoughts. So number one, stewardship. This is not a hobby. I'm building this now with money that long-term is going to go to my family. That long-term is going to provide for people I haven't even met yet. I have a Greek proverb here I want to share. A society grows great when old men plant trees whose shade they know they shall never sit in. So that's what I'm doing here. I'm trying to build this up, and then eventually this whole snowball will provide income, will provide accumulation of wealth for my family long term. And ETFs, they provide that. They provide that for me specifically. I don't have to worry about companies moving around. I don't have to worry about point number two. Companies go bankrupt. ETFs don't. Okay, so I want you to see the top 10 companies in January 1st, 2000. The top 10 companies were Microsoft, General Electric, Cisco, ExxonMobil, Walmart. Those are the top 5. So as you can see, General Electric. So let's say it's 2000 and you think, oh my God, General Electric, what a great company. We're going to just invest in them. I want to beat the market. I don't want all these weasel companies, holding down my portfolio. I don't want to invest in all other companies. I mean, look, Apple's not even on here, guys. Nvidia's not even on here. Okay, so just to think about that. Amazon, where's Amazon? Not on here. All right, you'd say, no, I don't want that Amazon, that online bookstore. That's lame. I'm going to do General Electric. Let's just put it all in there. Okay, how'd that work out for you? So basically, since 2000, you'd be at the top here. You're just coming back now. Look at that. it was 295 at the high, roughly. It was in the 260s, 295, and now it's 276 today. So over about 25 years, your money would have done nothing, and you're lucky it just came back recently. It's been down a long time. I mean, it was 33 bucks in 2021. Look at it, it's 46. Imagine the emotional roller coaster. If you had all your money tied up in this, would you like this? How's that sound? Versus this chart over here, S&P 500 over 5 years has doubled, more or less. And it's been a lot smoother. Has it been perfect? No. Are there ups and downs? Yes. But is that chart a lot smoother than this chart? Absolutely. And this is, guys, it just got back to baseline. If you put in $100 here, you just got your $100 now, but you went down to 30 bucks. I mean, this is a horrible emotional ride. I mean, who wants to do that? And number 3, risk averse. So you just ride the general trends, which is what I'm very comfortable in doing. So riding the general trends, let's look at them. Okay, look at all these years here on the screen. All these blue bars here, this is positive years. So they're up, they're up, they're up. And then the pink ones are the negative years. Obviously, you can see a lot more blue than pink. So that means this thing generally goes up. The S&P 500 specifically generally goes up. So this is something to think about. If you're starting off, do you really want to be on a wild ride, a volatile ride in a single company where, especially in this climate that we live in today, where anyone could say the wrong thing and mess up the company, and there's boycotts, and you could you could upset the left, you could upset the right. Either way, that's why I prefer ETFs, just from a 30,000 foot up way of looking at it. Thank you for spending some time here with McCall Invest.